Welcome back. I thought it might be helpful to take a little closer look at some of the correlations that have been emerging recently. I find them very interesting. Now, the following chart, this heat map of sorts, the way we read it's very simple. We have on the margin going up and down, and also left and right, we have a list of different financial markets. That includes commodities, equity markets, cryptos, many different markets of that nature. Now, essentially, for example, if we want to take a look at the correlation of the VIX in the lower left-hand corner, that's a volatility index, also known as a fear index. We match it up against, for example, crude oil, West Texas crude oil. There's a negative 51% correlation. So essentially, as the VIX goes up, crude oil goes down, and vice versa. A pure, perfect negative correlation when one market goes up and the other market equally goes down would be shown as a negative 100. A true, perfect, positive correlation would be a positive 100. Numbers near zero really mean there's no connection between the two markets. One market may move and the other will not. And I would say that any correlation above positive 50% or less than a negative 50% is something we really should pay attention to. So, for example, we have a negative 51% correlation between the VIX and crude oil. We have a 77% positive correlation between the VIX and heating oil. We mentioned this yesterday that as the VIX has been going up, we see, for example, kerosene, diesel, heating oil, all of which move very sharply in the opposite direction, in the same direction. As the VIX goes up, meaning as fear increases, the capital seems to be flowing into these commodities and out of stocks, for example. Now, something interesting I saw is a correlation between Bitcoin over here and, for example, we have a very strong negative correlation between Bitcoin and kerosene, diesel, and heating oil. You have a very strong positive correlation, obviously, with the other cryptos like Ethereum and Litecoin. You also have a pretty strong correlation between Bitcoin and the stock market. Now, all along with the advent of cryptocurrencies, one question that people always seem to ask is, will the cryptos act as a hedge? Or will they move in the same direction as equity markets? When capital is moving into the markets, will it also move into cryptos? Or will the cryptos represent some sort of hedge or protection of your money? So when stocks go down, will the cryptos go up? Well, I think the answer is not so simple, that I think sometimes this may be the case. So, for example, we see stocks have gone down over the past couple days, and as a result, the VIX, the volatility index, has gone up. Well, the VIX correlation to Bitcoin is a negative 56 correlation. So it seems at this point, at least, as fear increases, Bitcoin goes down, meaning Bitcoin is going down along with the Dow Jones Industrial Average. The Dow Jones Industrial Average is a 98% negative correlation to the VIX. Now, looking at the charts, it might be a little bit easier to picture this outright. Here's Bitcoin versus Bitcoin are the blue histogram bars. Kerosene is the red line. And we can see a pretty strong negative correlation. As the blue lines retreat, kerosene tends to move higher. Bitcoin, it seems that for the most part, at least currently, is moving in the same direction as equity markets. A pretty similar negative correlation between Bitcoin and diesel, Bitcoin and heating oil, for example, also moving in the same direction. Or moving in the opposite direction of Bitcoin, the same direction as each other. But more interesting, take a look at the charts. We see kerosene, for example. Kerosene, the price is the red line. It's crossed above the blue, which is a 20 simple moving average, and poking above the upper Bollinger Band. But notice also the position of the Bollinger Bands. Very, very tight. When the Bollinger Bands tighten, that usually indicates that we may see a breakout in the near-term future. Very similar chart in diesel, very similar chart also in heating oil. Now, compare and contrast that to, for example, to Bitcoin. We see almost an inverse chart where the Bollinger Bands are quite tight, but Bitcoin is trading below the lower Bollinger Band. at least for the time being, it looks like the cryptos are making their way lower. Here's Ethereum, pretty similar chart. Bollinger Band is a little bit wider. Litecoin as well, pretty similar charts. Putting this in some better context, we have the different indices. So for example, on the left-hand side, this shows us a major different indices found within the S&P 500. And it shows us a relative strength of each index. So all the way on the left-hand side, the highest index, or the index with the highest RSI, is the volatility index, the VIX. It shows us that fear actually is stronger than any other index, so to speak, right now. Number 2, the 10-year Treasury. And that really kind of tells us a whole story of what's going on. Stocks are going down in anticipation of higher interest rates, as we heard last week from the Fed chairman. Well, as a result, interest rates are going up, the 10-year Treasury index is going up, and fear is going up because stocks are going down. Number 3 is the Spider Energy Index. We've seen kerosene, heating oil tend to move up as well. Number 4 is a Bitcoin ETF. So we really see some of the strongest markets out there are the 10-year Treasury, the Fear Index, that's the VIX Index, energy, and some cryptos. Now I know for the time being, cryptos are a little bit on a weak side, but overall the relative strength is still quite strong. Now compare that to the weakest indices on the S&P 500. Weakest by far, Gold Miners ETF. Number 2 is healthcare. Number 3, gold and silver index. Number 4, well, there's a real estate index as well. But moving towards back to the gold and silver, gold miner indices, it makes perfect sense that if we expect higher interest rates, we'd also expect the US dollar to move higher as the 10-year bond yields moves higher as well. And we would certainly expect gold to go down. Gold tends to act as a hedge towards a falling US dollar. But the dollar right now is not falling. It's moving higher in anticipation of higher interest rates. The chart on the right-hand side shows us the 52-week range in the same list of indices. We're basically looking to try to identify within each index's 52-week range, low and high, where are we? Well, the 10-year Treasury index is right now at a level above 80%. That's 80, probably 83% of its 52-week range. Imagine a stock that has a 52-week range between 1 and 100. Well, right now it'd be trading around $83. Number 2, the utility ETF. Utility stocks tend to move higher when there's fear out there, when traders take their money out of the healthcare and the NASDAQ and the technology stocks and run towards a little bit more safety. Number 3, the Philly Utility Index. And number 4, an energy ETF. The weakest indices over here, the weakest is the gold miner, gold and silver index. We have telecommunications and some technology. So we can see trading right near the lows of the 52-week range are the gold stocks. They also represent the weakest RSI readings as well. So overall, what does this tell us? Well, it's fundamentally driven that the Federal Reserve has told us they're expecting higher interest rates in order to quell inflation. Well, those higher interest rates are driving the dollar higher, driving interest rates higher, driving bond yields higher, not the prices. Prices go down as bond yields go up, and the VIX, the volatility index, is going up. So going back to our correlations, if we expect stocks to continue to go down and the VIX continues to go up, well, what can we expect? Will Bitcoin act as a hedge? Well, right now it seems like Bitcoin is moving in the same direction as the other currencies. It's moving in the same cryptocurrencies, I should say. It's moving in the same direction as equity markets. It's moving opposite to kerosene, diesel, and heating oil. It seems that for the time being, kerosene, diesel, heating oil, not so much gasoline, but those other commodities are acting as the best hedge towards stocks outside, of course, the VIX, the volatility index. Another way to look at it, here's a Dow Jones Industrial Average. Dow Jones Industrial Average, as it goes down, we have a negative correlation, 78% negative correlation with kerosene, 83% correlation, negative correlation with diesel, 86% negative correlation to heating oil. Only the VIX do we see a stronger negative correlation. In this case, we see a 98% negative correlation. So if we want to hedge ourselves in a market that's somewhat unrelated to stocks, the numbers, at least for the time being, suggest kerosene, diesel, and heating oil. Now, why not propane to the same extent? Why not gasoline to the same extent? Gasoline has a 55% positive correlation. Well, if we were to put on our fundamental analyst hat for a moment, we may say, well, gasoline is one of those commodities that is a little bit more sensitive to consumer activity. If stocks go down, if jobs go down, if the prospects of a good U.S. economy go down, well, people will be driving less. Maybe they'll take public transportation. But you can't really substitute heating oil. You can't really substitute kerosene. Because these are more staples of the commodity markets. Diesel oil is mostly used in construction, long distance shipping of that matter. So I think that's a little bit less of a disposable product than gasoline. So moving forward, if we expect interest rates to move higher, and we're going to look at these inflationary numbers coming up in the near-term future to get a better gauge on that. But if we expect inflation to go higher, the Federal Reserve has told us very clearly what's going to happen. We're going to get higher interest rates, and that really is the whole name of the game. If that's the case, maybe investment capital will find a safe house, at least for the time being, in kerosene, diesel, and heating oil. And I would not consider Bitcoin to be a good hedge right now against falling stocks. It seems to be acting more as a speculative market that will go up when there's optimism in the economy. But I don't think that's the case for right now. We hope this has been helpful. We'll see you again real soon.